China will still be big. It just will not be growing like it did. So ultimately, you're going to have, I think, frankly, by the time we get to this realization, the best standard for future money will be, guess, Bitcoin. Bitcoin could become the standard, the gold for the new because it is digital and it is neutral and it is more limited, as somebody said earlier. Bitcoin could end up being the standard for a digital economy globally, where everybody has to tie to that. And that's why when Bitcoin goes down to 4,000, that is my forecast, 10,000 minimum. Even Michael Turpin, my big crypto guy down here, my friend, sees at least 10,000. Then I'm going to be buying Bitcoin. But I do think that crypto, that's Christo Jobs. Somebody said it's the digitization of all financial assets and money. When somebody,
I mean, am I tucking some gold away? Yes. Gold, silver, metals, Bitcoin eventually. Absolutely. But it's not something that is going to happen overnight. You're not going to wake up tomorrow to a dollar being worthless. We're not Weimar Republic, right? So I think that that's something that people have to hear, because I've seen so much on social media panicking about this. I had a friend that I hadn't heard from in years message me, hey, do I need to exit all my dollars? And it's like, not quite yet. I mean, it's one of those things you need to understand is coming.
A few days ago, the Federal Reserve said a mild recession was coming by 2023. Raoul Pal, the board chair, said their projections were seeing just a 0.4% GDP growth in 2023. So with the interest rates hike, the massive printing of money, and the dollarization happening simultaneously, the public opinion is not a mild recession but an awful recession like we haven't seen before. Gareth Soloway from InTheMoneyStocks.com and VerifiedInvestingCrypto.com has been saying that for a while, and in today's video, we will have him do a new outlook on what's happening, but this time with Harry Dent also calling it the biggest unprecedented bubble ever. So everyone needs to hear this and prepare for what's coming, where to put your money, and how to save yourself and your family. So please watch this video carefully until the end, and if you like it, please leave a like and subscribe so you don't miss any daily crypto and financial updates.
This should be the last rate hike. First of all, I think the Fed finally, now this is 13 years of stimulus, okay? Any economy after 2009 that needs 13 years of nonstop stimulus is fundamentally weak, as demographics told me way before 2008. 2023 would be a weak period between the baby boom generation peak and the millennials surging again, okay? So they've been fighting this for a long time, but I think this was a critical mistake here. He overreacted to COVID. COVID was an outside influence, short-term virus, nothing wrong with the economy. $5 trillion in monetary stimulus and $5 trillion in fiscal commitment, 10 trillion, 50% of GDP stimulus. And that's what took us from 1% inflation overnight to 9.1% inflation. And then the Fed was forced to reverse from endless stimulus to tightening. And I say this economy is weak underneath. It's been living totally on stimulus, and it will not react well to this tightening. And I do think that's going to continue to show up. And this will be the last rate hike, 25 basis points. But I think we're going to be in a recession faster than people think. And it's not a normal, the economy's overstretched, blah, blah, blah. This is a second financial asset bubble, bigger than the first one. This one totally artificial. And therefore, it's this bubble bursting in financial assets. And the top 20% that own 90% of financial assets are 50% of consumer spending. So I see a different type of recession that may turn into a short-term depression. It's just a deflation of the second major unprecedented financial asset bubbles. You had the roaring 20s, then you had the 90s, which was a natural bubble with some stimulus. This one is all stimulus, which means it's more artificial, more weak. And I think the market's falling is what's going to tip. I'm looking at the Russell 2000, the most clear chart to me right now, sideways triangle after this first big crash, which did signal to me a long-term top. It was big enough for that. We break 1,700 here, 3% lower in here, the markets are going to head down. I think the markets or the financial asset bubble falling is going to draw us into this unique recession, because the affluent people that drive 50% of spending are going to get their asses kicked harder than any time in history. Look at all the rate hikes, which I've done since the early 80s, okay? This is the biggest one in basis points raised. They don't have to do any more now. This hits, folks. Everybody should know this. 12-month lag. The 12-month lag on the March to recent raise in rates will just start to hit right about now in April and hit harder into early next year. I think the economy is going to weaken no matter what they do. They're dumbasses. The Fed has been you cannot run an economy on nonstop stimulus. You cannot say you believe in free markets and then not let the markets be free and correct and wash out debt and zombie companies when it needs to. That's what free markets do the best. It's not just success in entrepreneurialism and capitalism, it's failure. It's allowing failure. So this is a huge misunderstanding. I think the Federal Reserve understands nothing about the economy. How many of these guys, him included, Janet Yellen, for crying out loud, looked like she came out of a nunnery, okay? How many of these people have ever run a business or even had sex? Seriously. And they run our economy. Well, I mean, I really don't think all they do, they say, oh, he's doing a good job. If the economy's strong, they tighten, and if it's weak, they loosen. A 2-year-old could do, okay, a 4-year-old could do that. Recessions follow normal business expansions, and you always have an expansion and always a recession. No matter what any dumbass economist says, we won't have recession, okay? What the difference is, depressions follow financial asset bubbles like the Roaring 20s and like 1995 to 2000. And so it's the financial asset, it's the sudden and near permanent disappearance of wealth. It's not so much people layoffs are going to cause this overexpansion, normal recession. This is a second bubble. Everybody's way richer. People are sitting in a $400,000 house that was $100,000, even adjusted for inflation 10 or 15 years ago, for crying out loud. You did nothing, okay? So you have to take this excess out. Everybody gets hit, but here is the big difference in a depression. The rich get hit the worst. It's financial assets that go down even more than the economy. Unemployment might hit, I have a 1.5 time factor to 2008. Unemployment was 10 or 11 then, it'll be 15 or 16 now. Stocks are down 57, S&P, they'll be 86% now. This will be bigger, but it does hit the upper crust more. The everyday person, more layoffs, okay, we're used to that. Rich people aren't used to losing half their net worth overnight, okay? That hasn't happened. And every crash, even 2002, the NASDAQ was down 78% 2002, more than other, but it comes right back and makes new high. You mark my words on this and kill me if I'm wrong, because I'll probably be dead anyway. If we will not see new highs in these stock markets before I am dead. Okay, and I'm planning, give me, 2040.
When asked what if he was chosen to replace Jerome Powell, what would he do? Harry replied this.
I would say no, because you want to walk in into a recession that's already baked in the cake, which some are asked Jimmy Carter and some others. First of all, I would say the Fed is not in the business of regulating and driving the economy. It should have emergency injections when there's a real emergency. And COVID was a bit of that, but that would have meant a one-time injection. I would have had no problem with a $1 trillion injection in the early 2009 and that downturn, and maybe something like that in COVID short term. But to keep saying the economy has to go up and we can't have a recession, we would have no economy without recessions. If you don't understand that recessions are just as important in booms, like sleep is just as important as waking, then you don't understand the damn economy. So I don't think these people know anything. I don't think the Fed should be in the business. They should be providing enough money to conduct business and responding when there's a real short-term emergency, short-term. They should not be in charge of preventing recessions, which are the most fruitful thing the economy ever does. I know I was a turnaround manager for my first decade to small entrepreneurial businesses. I can make 10 times the change in a downturn I could when everybody's complacent in an upturn. Downturns, recessions are not bad. If you don't want a big recession, don't have a bubbly boom and overstimulate. And we've been stimulating nonstop for 13 years until last year.
What is Gareth's take on this upcoming recession? Does he agree with Harry?
Yeah, and I think it's important, and what Harry's saying is absolutely correct, is that when you have a baseline, right? If you just keep recession so the booms are just a little up, then the recessions are a little down. It's when you stimulate, you create the huge bubble, which in response then has to have the big downside as well. It's just the nature of life, right? I mean, if you're going to do a lot of drugs, you're going to have a big crash on the other side. I mean, it's the same kind of principle there. So definitely 100%. I do see a recession coming in the second half of this year. I'm looking at it in terms of the jobs data. We're starting to see that crack in the last report. I think we get another one next Friday. We've seen the inflation numbers come down, but not enough to enable the Fed to step in. And that's the key, right? So, getting inflation from 9% down to 5%, easy, right? I mean, that's just, supply chain starts to work again, all that stuff. It's that last, 5 to 2 that's going to be the trickiest thing. And I think that's where people in the market, for me, I look at the stock market. I'm slowly moving in more and more into the short side of the S&P and the NASDAQ. And that's purely from the aspect of investors are in this phase of saying, okay, the Fed will rescue us no matter what, because we've been conditioned just like an animal. The bell rings and you run to get the food. That's the way the market investors are. The Fed, the difference here is that with inflation north of, let's say, 3%, I don't see how they stimulate in the same way, because then they're going to send inflation to 20%. Instead of 9, it's 20, right? And so that's going to be a shock for the investing public when they finally realize the Fed can't bail them out. Now, it's not to say the Fed's not eventually going to come to the rescue. We know the Fed is notorious for moving goalposts. Eventually 3% inflation will be fine. Eventually 4%, and it'll just become the norm. So yeah, I think recession second half. I'm not predicting a depression at this point. I think that comes later in the decade with the 100-year cycle, just like COVID and the Spanish flu. But I think this is the beginning of that table setting for it. You're right about that, but I think it's important to kind of recognize who the Fed is, and again, it's important to recognize the Fed is supposed to be independent, but reality, they're affected. They're humans, right? They're going to be affected by political pressure. They're going to be affected by seeing people suffering, right? It's just human nature. Like when you have that ability, and unfortunately, this is the issue, and they need to be stronger and not do this. But when you have the ability to help people in the short term, it's hard to say, no, I can't do it. I have to watch you starve on the street instead of printing a lot of money so you can have money. But ultimately, that's going to be the downfall, is that you really need a body that doesn't care about that stuff, that has no influence, being influenced by other factors.
This takes us to one of the crucial subjects affecting the current economy, which will make it even worse in the future: the dollarization. And now you will understand how Gareth and Harry see it, and how you need to put your bets in Bitcoin.
Yeah, I mean, number one, de-dollarization is definitely happening. I think there's a lot of fear that's spread around because of it. In reality, am I making a trade today on the collapse of the dollar? No, right? I mean, am I tucking some gold away? Yes, gold, silver, metals, Bitcoin eventually, absolutely. But it's not something that is going to happen overnight. You're not going to wake up tomorrow to a dollar being worthless. We're not Weimar Republic, right? So I think that's something that people have to hear, because I've seen so much on social media panicking about this. I had a friend that I hadn't heard from in years message me, hey, do I need to exit all my dollars? And it's like, not quite yet. I mean, it's one of those things you need to understand is coming, but it's not like a do or die scenario right now. Now, having said that, there's no doubt that China wants to be the reserve currency of the world. They're trying to destabilize this by working with countries all across the world to start trading in digital yuan. We know Saudi Arabia is doing trading in oil and so forth in other currencies as well. So it's coming. It is in process. It's just not going to happen overnight. And the way you know that, by the way, is when you see fear hit this market, the stock market, where does the money go? It still goes back into the US dollar, right? So as of now, that's the case. But again, every investor out there needs to be aware that this is happening. The dollar will slowly become the non-reserve currency of the world, and you will see the dollar lose power due to that. And by that meaning, the U.S. will lose power as well. We know that the U.S. uses that as a reserve currency to maintain order that they see fit and control, and that will slowly slip away. China wants that control. Part of it is financial, craziness of printing money. I mean, again, if you look historically at the reserve currencies over the last 500 years or longer, there's a time life, right? There's a lifetime of a reserve currency, and we're kind of right at the end of that for the US dollar. So number one, that's just the nature of it. And by the way, it's not that there's a time frame on it. It's just that countries do not have the the discipline to not print their own currencies. You know, when you have the crazies running the crazy house, they're going to do whatever they need to do to maintain power, which is printing money and so forth. So it's just the nature of human nature, frankly.
Europe was the center of the world, 1500s and 1800s, and America rose and was the new place, and huge immigration and capitalism and all this sort of stuff. We became it. Now it's just moving to Asia. The progress has moved, you know, from west to east for all of modern times. Okay, so the dollar cannot be the central currency in the future. It's natural. I see the dollar only getting strong as a safe haven, just as it did in 2008. By the way, it went up. The dollar and treasury bonds went up 40%, right, in the worst of the crisis. It was the safe haven. So the dollar will be favored if we go into this recession that a lot of us are agreeing is likely. And I think it will be more a short depression. But we come out of this, the US is going to grow a lot faster than Europe. We're still the strongest developed country, major developed country. But Asia is going to have all the growth. And it won't even be China, okay? China is not going to throw its weight around after this. China is going to get hit the hardest. 22% empty homes, enough to house everybody that'll ever migrate from the rural. They've already gone to 60% urban. To get to 80%, they've already built all those houses to stimulate their economy. So they didn't print money, they printed condos, okay? So China is going to go down in the worst debt restructuring in history. And they're going to come out of this week, but Southeast Asia and India are going to be the future. And so demographically, the growth in the world is just going to move towards Southeast Asia and South Asia, India, and Asia altogether. China will still be big. It just will not be growing like it did. And so ultimately, you're going to have, I think, frankly, by the time we get to this realization, the best standard for future money will be, guess, Bitcoin. Bitcoin could become the standard, the gold for the new because it is digital and it is neutral and it is more limited, as somebody said earlier. Bitcoin could end up being the standard for a digital economy globally, where everybody has to tie to that. And that's why when Bitcoin goes down to 3,000-4,000, that is my forecast, 10,000 minimum. Even Michael Turpin, my big crypto guy down here, my friend, sees at least 10,000. Then I'm going to be buying Bitcoin. But I do think that crypto, that's crypto job. Somebody said it's the digitization of all financial assets and money. When somebody gave that at my own conference years ago, that's when I said, oh, now I get it. I don't understand crypto up and down. Man, that is what it is. It is a new form of money. So Bitcoin's only potential function is to be the standard, because Ethereum does a lot more work.
So with that in mind, what trades would Gareth and Harry take in the next 6 months?
I'll take the under on the NASDAQ. I say short NASDAQ, long gold. I'm agreeing with you. Bitcoin next 6 months, I still think it's headed lower first, so I'll take short on the Bitcoin. Yeah, so with silver, for me, it's a trickier trade. Gold's the pure play. Silver has industrial side to it, so if we do hit a recession, it's going to be a little trickier. Longer term, I think silver still goes up. It's just a trickier play in the near term. I would say short Apple, short Nvidia. I think, again, you're looking at a recession second half, and some of these valuations on some of these NASDAQ stocks have gotten ridiculous again. I would say short Pepe. I would say you know, these crazy crap coins that are going right now is a huge concern for me. It's not a signal of a bottom, it's a signal of a top. So just people out there, be careful out there. There's a lot of crazy pump and dumps going on.
Short crypto, which is just the most exaggerated sector of the equities and the risk level, and long, the highest quality bonds in the world, despite our deficits, TLT, TMF, long treasury bonds, 30-year treasury bond, the best. So short stocks, short crypto, long treasury bonds. That trade should work until the end of the year, then you revalue.
Did you take value out of this video? Want us to bring more curated content with Harry Dent? Let us know in the comments below. And remember to leave a like and subscribe so you get notified every time we upload a new valuable video like this. Thanks.